Hi guys, welcome back to the Wealth Kufa channel. I'm sure you've heard me mention money market funds and SACCOs, and in this video we'll be tackling the pros, the cons, which one is ideally for you. Are you a SACCO investor or a money market fund investor or both? That's what we'll talk about in this video. So we'll start with SACCO. A SACCO is an organization that is formed by a group of people who came together with a common interest to grow and invest their money. I won't go too much into the history of how SACCOs are formed and created, but I can give you some of the popular SACCOs in Kenya. We have Mwalimu SACCO, which is popularly among the teachers under the Teachers Service Commission, TSC. I'm sure you've heard of it. There is the Steamer SACCO, popularly among the employees for Kenya Power, KenGen. There is the Police SACCO, famous with the police. There's Mhasibu SACCO, famous with the accountants. And there's so many more. There's Ukulima SACCO. There's different SACCOs that come up every other day and have some that have been there for years and years. So when you're considering investing in a SACCO over a money market fund, these are some of the things you should know. I speak from experience because I have been a SACCO member since 2021 June. That's quite some time. So these are some of the things you should know when investing in a SACCO. Yeah. So a SACCO has different kind of investment schemes. Yeah. There's the SACCOs that have the savings options. So here is where the money invested in a savings account under your SACCO account grows dividends. And then there is the share account. So here is your share capital as a member of the SACCO. These two accounts, some are different. The shares account grows lesser, like it grows in smaller amounts than the share account, because a share account is like a higher risk because it's a bigger investment. You know, this is like the portion of the SACCO that you own in a nutshell. So if you have a SACCO account, you get the benefit of getting a dividend. A dividend is basically profits based off of your shares and your savings. When you want to choose which one to have a higher amount in, this is something you should consider. Some SACCOs allow you to buy shares, but then when it's time to exit or you're leaving the SACCO, this particular share capital amount, you have to sell them to another member or an organized group that is within the SACCO. So you cannot leave with this particular amount you have invested. So for example, if you have 1 million in shares in the SACCO, when you leave, you have to look for a fellow member to sell it to, or a new member to sell it to, because you cannot withdraw the 1 million as it is. But a savings account, on the other hand, you can be able to liquidate all of that money. So all of the savings in this particular account is yours to keep. So that's something you should consider as you grow your SACCO account. Okay, so a SACCO is a great investment for those who are looking for long-term savings, because the longer you stay in the SACCO, the more money you can get. The longer you stay in the SACCO, the more dividends you get. The more you save, the more dividends you get. So a dividend amount is basically the profit based off of your shares and your savings, and it is usually given out once a year for most of them. Some do more times, but regularly it's just once a year, around March, April in the year. So various SACCOs give various returns. There's SACCOs that give about 6%, others that give up to 25%, others even higher or lesser. So go for a SACCO if you know you're going to save in the long term. If you are somebody who is looking for a way to get credit, by credit I mean like a loan to be able to expand in whichever area you need, a business, your life, anyway you need. SACCOs are great for lending. They have a great return and a better interest rate compared to the bank and other lending facilities. Okay, so who is a SACCO for? Somebody who wants to be able to have access to affordable loans in terms of the interest, somebody who would like to tap into the power of dividends but still have the ability to have long-term savings. If you consider taking the SACCO route, I would say a SACCO isn't a short-term thing where you put in your money today and then tomorrow you come take it out. No, the only forms of money you are able to get back from a SACCO is either your dividends, either the loan, or when you're closing your account and getting back your money. Yeah. So one other thing I forgot to mention about the loans is a SACCO will give you a lower rate in terms of your loan, and it will also allow you to get like a bigger amount, more than your savings. For example, if I compare it to a bank will give you a loan based on how much you have saved or how much you have been transacting, as opposed to a SACCO, which will allow you to even take, some SACCOs allow you to take even 3 times your savings. So if you are looking for that expansion fund, a SACCO could help you. Okay, so that is all I would say in regards to a SACCO. Please don't think a SACCO you put in your money and take out, because I know a few people who are victim to that. That's not how a SACCO works. Apart from those benefits, I'd say it allows you to have that networking opportunity. For example, the SACCO that I'm in has monthly webinars where we have discussion on how to invest your money, how to build your money, how to grow financially, what you can use the loans for, and things like that. So it allows me as a member to have access to a loan to be able to build a house, buy a house, invest in land, invest in businesses. So that's what my SACCO does for me, and I appreciate being a member. So that's all on a SACCO. If you have any questions in regards to SACCOs, please let me know in the comment section. I will be ready to answer them. Now, if you consider a money market fund or an MMF, these are the things you need to know. So a money market fund, I would describe it as a high transaction. It's like a bank account with no loans. So what does that mean? So this means I can be able to put in my money and take it out the same day. Unlike the SACCO, that's one of the biggest differences. So a money market fund will grow your money, and it grows daily. So you don't get like a dividend payout like the SACCO. It's like for the SACCO, the dividend is like a separated amount from the savings and the shares, versus a money market fund, it is all together. So for example, is if I put my money in January and it's like a 10% return, I put 10,000 in January. By December, it will be 10,100, 11,000. That's assuming it's 10%. So what happens is my money actually accumulates interest. The interest is accumulative. It will be growing daily, like 1 shilling, 2 shilling, 3 shilling. I'll be able to see that from my money market fund. Okay, if you are somebody who knows that you don't prefer keeping your money far away where you cannot be able to access it whenever you want, I would say consider a money market fund. if you are building an emergency fund, which is basically 3 to 12 months of your expenses, I would say consider a money market fund, because money market fund has the advantage of liquidity, basically being able to withdraw your money and get your cash. Although a money market fund does come with a withholding tax fee of 15% of your interest, so be ready to get your withholding statement in your emails. Yeah, so a money market fund allows me to put in money and take it out. It's accessible. There's different kinds of money market funds. I could mention a few. We have Zemele, we have Sanlam, we have Kuza, we have Etika, we have CIC, APA. There's so many different money market funds, depending, and they all operate under like different laws. So an example is a certain money market fund does not allow you to withdraw your money until 2 to 3 business days are over, versus another money market fund will allow you to withdraw the same day, and then there's the ones that if you withdraw your money more than one time a month, you will get like a transaction fee of X amount, versus another one where it has a standard transaction fee. So depending on your preference, I would say do your due diligence and do your research so that you don't end up in the wrong money market fund like I did when I started. Yeah. So if we compare a money market fund and a SACCO on what they're both for, I would say a SACCO is best if you are looking to access the dividends, so the annual dividends. An example of a way this can be of help, the annual dividends, is I know of an individual who saved up enough money in his SACCO account to be able to get an annual dividend that allowed him to pay for all of his expenses in the year. So he saved up, we could say, an amount of $1 million in his SACCO, and every year he receives 120,000, which is enough for him to pay off his expenses for the year. So that's an example. Another example of a good benefit of the SACCO is the ability to take loans. So if you're looking to expand your business, again, a SACCO is a very good option. If you're not looking to take loans, you could consider the dividend option because it is 100% passive income. Yeah. Versus a money market fund is for more short-term form of savings. So if you're looking to save for maybe the holiday getaway or your emergency fund, a money market fund is better because it will allow you to withdraw your money on the go daily, if you will. Although I will not encourage you to be withdrawing your money daily, because the whole point of putting your money in a money market fund is allowing it to grow compound interest. But yeah, so if you have any questions in regards to a money market fund or a SACCO that I did not cover, or if you have any experience with either, please let us know in the comments. I'll appreciate your feedback. Thank you very much for watching. I'll see you in the next episode. Goodbye.